I'll show you the exact AI prompt pack I use to create YouTube videos in minutes. Stick with me for the next half hour, and if you want faster, smarter crypto learning, hit the subscribe button right now. Today, I'm building the roadmap you actually need to learn crypto the smart way. We will cover long term investing, risk management, portfolio allocation, realistic wealth building strategies. No hype, no get rich quick nonsense. Keep watching because I'll give simple practical steps you can use this week, real examples you can follow, and safety rules that actually protect your money. By the end, you'll have a clear plan and a routine to stay disciplined. Why think long term? Think of crypto like planting a seed, not buying a lottery ticket. A lottery ticket can win fast, but most of the time it's gone. A seed grows, compounds, and becomes a tree. Crypto markets are volatile. A 10% swing in a day is normal. That noise doesn't mean the market is broken, it means patience matters. A simple example would be if you invest a fixed amount each month, dollar cost averaging, you buy more when prices are low and less when they are high. Over time, that smooths out the ride and uses compounding in your favor. Remember, market cycles boom, bust, consolidation. Focusing long term reduces stress, cuts emotional trades, and improves your odds of compounding gains. Risk management basics. Risk management means protecting what you have while you grow it. That's the first job of any investor. Position sizing is key. Don't put too much into any single crypto as a general guideline. For risk, for high risk plays, think 1 to 5% of your investable portfolio. For core holdings, maybe up to 10 to 20% depending on your risk tolerance. Let's do a quick maths story. If you have 10,000, putting 50% into a single risky token can wipe you out on a severe drawdown. But spreading it across core assets and smaller positions helps you to survive downturns and take advantage of recoveries. Stop losses versus mental stops. Automatic stop losses can help short-term lead traders. Long-term investors often use mental rules and rebalancing instead because stop losses can trigger on normal volatility. Diversify across BTC and ETH for core exposure. Hold some stable coins for opportunity or safety and keep a small allocation for alt experiments. That mix preserves capital and keeps upside. Portfolio allocation frameworks. I'll give you three templates you can use today depending on your life and goals. Conservative, beginner would be 70% BTC or ETH, 20% stable coins, 10% small alt experiments. Use this if you are new, risk averse, or close to needing cash. Balanced growth is 50% BTC, ETH, 30% alt projects with strong fundamentals, 10% with staking yield, 10% cash good for long horizon investors who want growth plus some income. Aggressive explorer would be 30% BTC, ETH, 15% alt projects, 10% protocol yield, 10% cash. For experienced investors who accept big volatility, when should you use which? Consider your age, financial obligations, and how much you can sleep through a 50% drawdown. Rebalancing rules. Do it quarterly or whenever allocations drift by more than about 10%. When odds run up, sell some winners and buy core assets that locks gains and reduces risk. The three pie charts rebalancing. Fundamental research. How do you evaluate a crypto project? Use a checklist, team and background. Do they have real experience? Real use case. Does the token solve a problem? Tokenomics, supply, distribution, inflation. Who holds the coins? Community and adoption, active users, developer, activity, GitHub commits, roadmap and partnerships, realistic milestones, credible partners, security audits, and on chain transparency. Has the code been audited? A quick example would be, imagine a DeFi project promising high yield. Check who built it, the token supply, whether audits exist, and how many real users are interacting with it on chain. If the project depends only on marketing or influencers, that's a red flag. Risk reducing practices and safety. Safety first. Small mistakes cost big money in crypto. Use a hardware wallet for long term holdings. Exchanges can and do get hacked. Enable two-factor authentication everywhere and learn to spot phishing links and fake sites. Seed phrase strategy. Write it down on paper. Consider a steal backup if you can. Don't store it in the cloud. Always do a small test transaction before sending large amounts. For staking and yield, check contract audits and prefer well-known trusted pools. Follow these and you will avoid common costly errors. Behavioral traps and emotional control. Emotion kills returns. Common traps are fear of missing out, panic selling, revenge trading. Try these simple mental tools. Pre-commit rules. Decide to DCA monthly or rebalance quarterly before you start. Cooling off periods. Wait 24 to 48 hours before reacting to big news. A trade checklist would be motive, time horizon, worst case outcome. If you can't answer it, don't trade. Short story would be a beginner panicked during a dip and sold 80% in losses. They waited, stopped reacting to headlines, resumed DCA and recovered most of the position over the next cycle. Discipline beats predictions. Practical outflow would be make a weekly, monthly and quarterly routine. Weekly would be 15 to 30 minutes. Check allocations, filter important news, update watch list. Monthly would be about 1 hour. Rebalance if needed. Review fundamentals, adjust allocations. Quarterly would be 2 to 3 hours. Deep portfolio review, tax planning, risk assessment, tools to use, portfolio trackers, CoinGecko or Coin Market Cap, block explorers and basic on-chain analytics. Keep it simple. Consistency beats complexity. If this has been helpful, please hit subscribe. We publish practical crypto education every week so you can invest smarter, not riskier. Quick recap would be focus on long-term investing, manage risk with sensible position sizes and diversification. Use simple allocation templates that match your life. Do basic fundamental checks, follow safety practices and train your emotions. Realistic crypto wealth building is slow, steady and disciplined. The goal is to survive cycles and compound gains over years, not chase short-term hype. Final call to action would be to watch our next video, reveal common beginner mistakes, emotional trading traps and safer investing habits. It goes deeper into the mistakes beginners make and gives practical fixes to protect your capital. Click on the screen now